What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. It's a great day to talk about growing wealth, building wealth, and creating wealth. Maybe even a little bit of preserving wealth for the long run. In today's video, I want to talk about why I'm investing, why I'm so involved in finance, and why it plays such a big role in my life, and why it's been important to me for a really long time. Back in late 2017, I started stacking silver and gold coins, rounds, and bars. It's more of just like a hobby for me. I stack the precious metals more so for fun, but I invest as close to every leftover dollar that I can at the end of every single week so that I can build something for myself. And over the years, it's been compounding, and I've been seeing tremendous results from a wealth preservation perspective to a wealth building perspective. And I want to talk about how important that is and why we should all be taking finance as serious as possible. Your future self will 100% without a doubt thank you. Now, I'm not going to be talking about specific dollar amounts, obviously. That's not a smart thing to share with the general public, but I will be sharing the percentage side of things, the capital appreciation, the growth from a percentage perspective. Now, as always, if you like the video, hit the like button, subscribe to both of my YouTube channels, and follow me on social media at Mykie DYDSS across all platforms. And if you need any stacking or prepping supplies, I will leave those Amazon affiliate links in the description. So let's start out by talking about silver. I don't have an exact dollar amount of what my average cost on silver is, being that it's like a physical thing in my possession, and I don't have the precise to the penny dollar amount what my average cost has been over the years. But I started picking up silver tail end of 2017 going into 2018. It kind of bottomed out that year at $14. Back then the premiums hardly even existed. It was like $1 to $1.50 over spot, at least for the coins, rounds, and bars I was picking up. So I got a majority of my silver. Most of the silver that I've picked up since 2017 was acquired in the summer of 2018. That's when I got the majority of the silver that I own today. Back when the spot price was $14 with like $1.50 premium. With that being the case, I continued buying on the way up as well. I've dialed it back over the years, but I did continue buying $18, $19, $20, $21, $25, $26, $32, $33. I did continue buying on the way up, but being that I got so much at $14, $15, even $16, $17, I would say that my average cost is probably somewhere between $18 and $19. So let's call it about $18.50, and that's including the premiums. Well, let's just say, hypothetically, my average cost is about $18.50, including premiums. Spot price, as I'm recording this video, is $42, excluding premiums. That would be a growth rate of approximately 120% from day one to present day, give or take about 127%. I'm going to have to crunch some numbers for a future video to talk about gold, because I'm very light on gold. I'm very weak on gold. That'll be separate. But either way, I would say my growth rate on gold is probably about 100% as well, or maybe even over 100%, because I started picking up gold when the spot price was probably $1,400, $1,500, and the spot price of gold is currently $3,641. I don't remember how much gold I picked up at the peak, or the highest gold was when I picked up gold, so I'm going to have to crunch those numbers for another video. But either way, precious metals, just by stacking coins, rounds, and bars for fun as a hobbyist, I am up over 100% on both precious metals. So now let's talk about investing. I have a variety of different accounts, a variety of different types of accounts. I have 2 taxable accounts. One is my primary account, and the other one just has, a couple little holdings in it. I'll get into slightly more detailed as I go through each account. But I have a primary taxable account. I have a secondary taxable account, a much smaller one. It's more of a play-around account. I have a 401k from my full-time job. I have a 401k from my part-time job. I have technically 2 Roth IRAs, but I'm going to transfer everything from one account into the other, so it'll eventually just be 2 accounts. It'll eventually just be 1 account, 2 combined. I have an HSA, a health savings account, and I also have some equity in a business that I work for. It's a privately owned, you can't buy the stock, it was given to me by performance. But I have a variety of different types of accounts, and I want to run through each one and talk about the total percent gain from the day I opened up the account to present day. Now, some of them are older than others, so keep that in mind. And if you want to know a more detailed explanation of what each account holds, like I'm going to be talking about, I have a couple of ETFs here, I have a couple of ETFs here. If you want to know the details or the specifics of the ETFs, I'm going to be doing an update VIP Club video. If you don't know what the VIP Club is, it's what I call my Patreon account. Join me on Patreon. I post every single one of my videos there, early and commercial free. There are no YouTube ads that pop up because it's off of YouTube, so there's no ads. You can watch them before they're actually released to the public. And not only that, sometimes I'll post some exclusive bonus content there as well, and that's what this is going to be. I'm going to post an exclusive VIP Club video breaking down each of my accounts and talking about exactly what these ETFs are in each account and why I invest in them. But anyway, back to my number 1 primary taxable account. This is something that I opened up end of 2019. So 2019, all the way to present day, when I looked at the account this morning and I looked at my all-time gains, it was about 69.98%. I sat there and I waited. I said, just wait. I want to get the perfect screenshot here. And I did. My all-time gain on this account, 70%. So from the end of 2019 to present day, 70%. So that's averaging out, obviously, a couple different holdings. I have 2 main ETFs. Those are my core holdings. I have a third ETF, and then I have maybe 15 to 20 individual stocks. If you want to know what those ETFs are, that's what the exclusive VIP Club video is going to be. But my primary taxable account, I'm up 70%. My secondary taxable account, which used to be almost like a replica of my main account, I don't really understand. I have no idea what I was doing at the time. I was like, well, I'm just going to make a taxable account on a different app, and I'm going to buy the same things. I don't know why I did that, but either way, I condensed the 2 together, moved all that over to my primary account, and I just have 3 holdings in there that I'm holding more so just for fun than anything else. But the secondary taxable account is up 51.46%, with just 3 holdings in there. Moving away from the taxables, let's talk about the tax-advantaged accounts. So I have the first Roth IRA that I built with 4 positions, 4 different ETFs. Again, if you want to know what those ETFs are, it'll be in a VIP Club video very soon, probably within the next week. It is up 30.82%. This year, I opened up a new Roth IRA. So I took those 4 ETFs from the first one, and I stuck with 3 of the 4, because the 4th one was a little bit more of a stabilizer. During the good times, it goes up, but not by very much. During the rocky times, it can go down, but not by very much. It's a stabilizer. It's something to kind of lean on during the crazy times. But then I kind of came to the conclusion, I was like, you know what? I'm on the younger side. I have decades to go. I don't think I really need much of a stabilizer at this point. So I took 3 of the 4 ETFs, and I replaced the 4th one with something else, and I added a 5th ETF to my new Roth IRA. And I am going to be condensing these 2 together, so at some point in the future, these 2 Roth IRAs will be 1 Roth IRA. But the new one that I started this year is up 11.88%. So both taxable accounts are up by a lot. Both Roth IRAs are up by a lot. Now let's talk about work-related retirement accounts, because I not only have 2 taxables and 2 Roth IRAs, but I have 2 401ks. I know this might sound a little bit ridiculous how I have so many different accounts, but they're all for different reasons, and they're all for yeah, you get the point. So I have my full-time jobs 401k, where I get a 5% match. I am up 22.09%. Not bad. Now, at this time, for this entire time, since the creation of this account, 100% of the money between my contributions plus the 5% match goes completely and entirely into a target date fund. Like a specific year planning the retirement, that's just what it is for. A lot of the time these target date funds have a higher expense ratio. This one actually does not, which is why I went with it. And I'm up 22.09% since I opened it up. Moving away from that, let's talk about my second job, 401k, where I get a 4% match. I am up 16.8% since the creation of this account. Less than 2 years. I'm up 16.8%. So I do this for a reason, if you guys haven't figured this out. One of the reasons I even got a second job in the first place was because not only to have a plan B, but eventually I plan on kind of transitioning over to that one anyway. The longer I work at both companies, the more I realize that my second job, there's more advancement opportunity, more money to be made in the long run, and I just think that they're better when it comes to, I don't know, I just feel like my first one is mildly archaic, and I kind of feel like they reached their peak, while my second one still has like so much room for growth and whatnot. So I'm actually training at the second job, the one that I've been at for almost 2 years now. I'm kind of like learning the roles of supervisor level stuff, so that way I can, more administrative level tasks. That way when I do eventually make the switch, it'll be an easier transition. I can go through more formal training and already know a majority, if that makes sense. So anyway, 2 taxable accounts, up by a lot. 2 Roth IRAs, which will eventually be 1 Roth IRA, up by a lot. 2 401ks, both up by a lot. Everything that I have mentioned so far, I am up double-digit percents, and in the precious metal world, I am up triple-digit percents. But wait, there's more. I also have a health savings account, an HSA, which is not only a double tax advantaged account like a Roth IRA and a 401k, but it's actually a triple tax advantaged account. And I am up. And by the way, in the health savings account, my 2 core holdings are 2 ETFs, and then I have a couple of tech stocks in there as well, but it's mainly 2 ETFs. I am up 12.71% on my health savings account. In addition to that, I have one other account, I can't tell you how much I'm up because I don't know. Here's another perk to having my secondary job. It's a privately owned business, and the longer you work there, and based on performance, you're actually given these little bonuses, and these bonuses are in the form of equity in the privately owned company. So based on my performance last year, I was given a small piece of the business this year. It's not a publicly traded stock. So you can't look at it every day and be like, oh, we're up 1% today, or we're down 0.5% this week or this month. It doesn't go like that. They have third-party analysts come in to determine what the price is. And this is either yearly or twice a year. I don't remember. But either way, it was given to me this year. So that number hasn't moved. And it will not move until it's analyzed again, and then I'll be able to see if I'm up or down by however much percent. But at the moment, up or down 0%. But either way, it was given to me for free, so it can do whatever it wants. So coming around full circle here, why do I do this? Why do I do what I do? I do what I do to set my future self up for success and a life of abundance. In fact, I'm going to sit here and say, I am not rich, I am not wealthy, and I am not a millionaire. ... Yet. I speak to myself by saying the opposite. I do tell myself, I do say that I'm rich, I do say that I'm wealthy, I do say that I'm a millionaire, and I do say that I've created success and a life of abundance for myself. ... Time just hasn't caught up yet. I speak these things into existence, and I don't just sit here and say, "Oh, I'm rich because I'm manifesting it." No, that's nonsense. I speak it into existence, and I also take all-out massive action. I do the 8-hour days just like everybody else, but guess what? I also do the 12-hour days. I do the 16-hour days. I do the 6 days a week, the 7 days a week. I work on little side hustles in addition to my 2 jobs. I do pick up a little bit of silver every now and then because stacking silver and gold coins, rounds, and bars, it's a hobby of mine. It's something that I enjoy. I think it's fun, and I've learned so much about history, so much about different parts of the world. I've learned so much from the silver and gold, and plus it's fun to hold on to. Like, it just feels good in the hand to hold on to a nice silver bar. It just feels good. It feels cool. It feels fun. And I enjoy it. Everybody has their hobby. Most hobbies cost money. Some people look at silver and gold, waste of money, blah, 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 blah. Okay, well, so is the car that you're working on, in my opinion. So are the art supplies that you buy, in my opinion. In your opinion, they're not waste of money. In my opinion, silver and gold, not waste of money. And, objectively speaking, you can't even get away with calling them a waste of money anyway, because I'm up over 100%! So either way, coming around full circle here, the silver and gold have performed tremendously for me over the years, from the end of 2017 to present day. We're almost 10 years. Jesus. Both precious metals are up over 100% for me. I invest my dollars as well. The stock market has treated me very, very kindly since the end of 2019, especially 2020. That massive crash has made a lot of money for a lot of people. Has made a lot of money for the people courageous enough to take all-out massive action when everybody else was running for the hills. Now, we know how to recognize opportunities when we see one, which is why I dove in extra in 2020, in the midst of the crash. The month that everything crashed, I dove in extra. And I at that point moving forward, I started putting every single leftover dollar that I could in every single week during this crash. The crash that, obviously it crashed, and it didn't just pop right back up. It spent, a good portion of that entire year low. It bottomed out, and then it stayed there for months before we started picking up again. And I was just buying and buying and buying as much as I could. And I continued buying and buying and buying on the way up as well. And as a result, both of my taxable accounts have performed amazing. Like I said, the silver and gold, both of the metals are up over 100%. Silver in particular is up over 120%. Gold, I'm actually going to have to really figure out exactly how much I'm up, but I know I'm up over 100%. My primary taxable account, 70%. Secondary taxable account, almost 51.5%. My main Roth IRA, up almost 31%. My secondary Roth IRA, up almost 12%. My main job's 401k, up 22%. My second job's 401k, up almost 17%. My health savings account, up almost 13%. And I have equity in a privately owned business as well. So it's one of those things where, like, was this overnight? Did every single thing that I buy jump up double-digit percents, triple-digit percents overnight or over the course of a week or a month or a year? No. This has been over the course of, with silver and gold, this was like the end of 2017 into 2018. Here we are in 2025, getting kind of close to 2026. Like, this has been, 8-9 years in the making. It's not like you can't just look at me and be like, oh, you got silver and you're up over 100%, over 120%. Oh, must be nice. No. I waited like 8 years and I kept buying more for 8 years to be able to say that. My primary taxable account, I'm up 70%, but that's because I dove all in at, the scariest stock market time in my lifetime. The craziest event that took place, or one of the craziest events that have taken place during my lifetime that caused, one of the biggest crashes in history. And I dove in. I dove in at that point when a lot of other people ran for the hills. And I continued buying in, even when prices went up. And I've stayed consistent. I've been buying every single day, just a small tiny bit, every single day for years, with my two primary taxable accounts, the two big index funds that I have in there, two big ETFs. I buy every single day, and I've done that Monday through Friday, every single day, every single week, every single month for several years now. There are other positions that I hold that I'll buy maybe once a week or once a month or once every 3 months when that dividend rolls in. My 401k, I make that contribution every single week. My Roth IRA, this year I've maxed out my Roth IRA. Last year and the year before I maxed out my Roth IRA, so I stay consistent with that. Next year I plan on maxing it out as well. I actually plan on maxing it out very, very, very early. And my health savings account, last year was my first full year, I believe, with the HSA, so I maxed it out last year. This year I'm on track to maxing it out as well. I'm doing everything that I can, and I'm staying consistent, and I'm buying more regardless of what the prices are doing. Prices are up, the market's green, I buy. Prices are down, the market's red, I buy. Why do I do this? I do this because I'm dollar cost averaging every day or every week or every month or every 3 months over the course of, at this point, years and years and years and years, with still several decades to go. And I know, and I can say with the utmost conviction, I will be tremendously rich as a result of my own sacrifices. Not going out to eat all the time, not going out partying, not spending money over here. I cut back. I focused on my budget. I reduced my expenses. I broke my back working 2 friggin' jobs plus multiple side hustles. I sacrificed a tremendous amount of time to see some of the results that I've already seen, with plenty of more results to come years and decades into the future. As a result of my own sacrifices, as a result of my own action. And I'm excited about that. I'm happy about that. I take a lot of pride in that. I see these numbers and it's crystal clear. It's smacking me right in the face, telling me it's worth it. It's paying off. Everything you're doing is paying off. It might not feel like it in the moment. It's not fun working 16-hour days. It's not fun getting home at 11 o'clock at night and having my alarm go off at 3:45 in the morning almost every single day. That's not fun. It doesn't feel good, but it doesn't have to, because it's not going to be like that forever. It's actually only going to be like that for maybe 2 more years before I, make the switch with work. But I'm going to keep doing it as long as I can. Working a second job by choice. Not because I need to. A lot of people, I understand a lot of people do it because they do. I do it by choice so that I have even more to invest, so that I can eventually leave one of the 2 jobs. I ain't going to work on 2 jobs forever. But this is why I invest. And this is why I do everything that I've been doing in regards to personal finance. It's not just a matter of saving money and that's it. No, it's a matter of saving money and investing that money, deploying those dollars and making them work for me. Putting a little bit into a hard asset, precious metal, silver, and gold as a form of wealth preservation, kind of like a little bit of just kind of sprinkled on top of the wealth creation that I'm doing with stocks and business. And guess what? It might not work for everyone because maybe not everyone enjoys doing this. This is something that I thoroughly enjoy. I have so much fun doing this. I love it. I'm having the time of my life. I genuinely enjoy it, which is why it's easier for me to do. Some people, this might frustrate them. I understand that. But if you take even a small portion and, at your job, if you do at the very least contribute to your 401k just enough to get the full match, that's a start right there. Get yourself a Roth IRA. You don't have to max it out. $100 a month can go a really long way. A really long way. Trust me. That's actually how I started. My first year with the Roth IRA, I was doing $100 a month. So, long story short, coming around full circle here, this is why I invest. This is why I take finance so seriously. It's only been a couple of years. It's been less than 10 years. Investing, it's only been 5 years. Give it another 5. Give it another 10. I'm going to be having a whole different conversation. But the premise is still going to be the same thing. Here's what I do and here's why I do it. But my results will be wildly different. I will have much, much more than I have today. And I'm looking forward to it. The more you do, the more you create, the more opportunity presents itself later in the long run, and it all compounds. Small steps in the right direction will inevitably take you to where you want to go, and I'm on my way. And I encourage you to do the same. Figure it out. Figure out ways to reduce your expenses. Figure out ways to increase your income. And invest more. Trust me, it's worth it. Trust me, the results will show. Trust me, the hard work will pay off. As always, if you like the video, please hit that like button. Subscribe if you are new. Subscribe to my second channel for bonus videos. Join the VIP club for exclusive videos. Remember, I'm going to have one coming out very soon, breaking down the different ETFs I have in all these different accounts, and maybe I'll even mention some of the individual stocks that I have as well. And if you follow me on social media, there will be even more content over there. Mykie DYDSS on Instagram, X, and TikTok. And if you need any silver gold stacking supplies, some prepping supplies, all the Amazon affiliate links will be in the description. Head on down to the comments and let me know anything and everything related to today's video topic. Which account do you have that has seen the most performance? Don't tell me any dollar amounts. That's not my business. But if you want to share the percentage growth that you have seen over X amount of years, however many years it's been since you've been building this, regardless of how much you put in or how little you put in, let's talk about it. The comment section down below. Thank you guys so much for watching. See you in the next one. Don't you dare stop smiling. Peace.